Hey there and good morning traders. This is Trader Tim from over at eminimind.com doing a trade recap for the week of September 10th here. It's September 10th, 2020, Thursday, and we're only halfway through the day, but wanted to discuss a couple of things that occurred this week and run through some trades as well. So as far as the bigger picture goes, if we start there on the daily chart of, well, we just stick with the SPY here. One of the things that I look at, the first being the bounce that we've had here over the last, this being the third day. We kind of have the sell-off being the pole of a, what's known as a bear flag. And if you look at the big volume on the two big days down, now Friday put in that hammer, but then was able to break that on Tuesday of this week. And so we had the 3-day weekend in there. As far as the puts go, um, I always like to manage positions at the close. So on Tuesday, I closed out of my hedge, and I'll look to uh, typically what I'll do is I'll close out of the hedge or most of it, and then look to put on a new hedge when we come back up to the halfway back short. In the last couple of days, we've kind of moved to this. We'll go to the S&P here, make it a little bit clearer. We've moved up to this kind of unfilled gap from Friday, about 32.27 or 34.27, excuse me, and I haven't been able to quite break above that. And so, the sell-off, we've only made our way maybe 40% of the way back, and I'd like to see us get all the way to that halfway back, 3460 area or 3450 even on the S&P. But what's interesting is that if we look at a larger time frame, or at least going back, we'll stick with the daily chart, but if we go back, the pattern that we're seeing here reminds me a lot of what we saw in the start of 2018, where we had this big run up, and it was all, the second half of 2017 was a strong rally. The start of 2018 was a really, really strong rally, and then we had a pretty significant sell-off, which followed, increased volatility followed, and we were kind of in this range for a couple of months. And part of me thinks that this kind of scenario is quite possible here. There's a whole lot of factors that will come into play this fall. Everything from the election to things that could come out positive or negative from the pandemic. We've got in the U.S., a forbearance on mortgages, so people aren't getting evicted, and so there's all these factors that are in play, and I think that we'll see a little bit more volatility than we have. Right now, sitting in the upper 20s, that's still pretty low. One thing that was interesting is on these sell-off days, we really didn't have a monster spike in the VIX, and we didn't have a huge bearish breadth in the advanced decline line. I mean, even today, we're around 2-to-1 negative, and minus 300 on the advanced decline line is not very bearish. So I think we can still, get a little bit of up move here, but I think we'll have some increased volatility in the months ahead. If you look at our spike in the VIX from the last couple days as it relates to the spike that we had in June, in the mid 40s, we only spiked in the last week or so to about 38. And if we compare that to where the S&P was in June, that was down at our 50%, our entry point. So now the first thing I drew up was a high to high that broke its extension on Tuesday. And so when an extension breaks, I just go back to the traditional low to high drawing, and that's what I'm looking at here on the S&P. We've got a long below us and then a short above us, and we're kind of just in that limbo. So be watching tomorrow and Monday. If we can go a little bit higher, I'll put on another hedge, and then if we go higher from there, then I'm okay like taking off the hedge. You capitalize on the move down in the short term, and I'm okay, putting on a hedge, and then if we go above a certain level, taking it off and just, capitalizing on the longs. A couple other things I wanted to highlight about today specifically. We started the day in this really sloppy, tight range. I get not really a sloppy range, but just a very specific tight range like this. And so there's a couple ways you can play this. The first would be, when you see yourself come down to a double bottom like this, looking to buy, at lows. The trouble is you don't know, like in the morning today, this was kind of the first test of the lows of the morning. And so if you draw up a retracement, you're not going to have any stopping in the middle of that range. So there was no short entry here. We didn't stop and then get a little set up short on the 512. We just blew right through it. And then if you turn it around and you draw it in the other direction, we were able to get a little bit of momentum to the upside, but really we were messy at the 50%, meaning we traded into the 61.8 and then just, you know, hit ourselves on the ceiling a bunch of times this morning. And so a way to capitalize coming out of that range, well, I guess first off, not trading in the middle of a range is a way to keep yourself safe. So if you see a failure of a long and then a failure of a short, it's a good opportunity to say, okay, I'm going to sit back, sit on my hands, and not take any trades in the middle of the range. If I'm going to trade, it's going to be longs at lows or shorts at highs. And if nothing sets up in that regard, then what you can do is just put a sell stop below the low of the range and short on the breakout, or in this case the breakdown. And you could have a buy stop above the top of the range to be buying on the breakout to the upside. And then once you break out or break down, you can go from highs to lows for a potential trend retracement in the direction of the trend, and that's kind of what we have for today. But it's easy to get really chopped up in the morning, take a whole bunch of trades, take a whole bunch of stop outs, and then just kind of dig yourself a hole where even if you catch a nice move later in the morning, it's kind of like too little too late. So if you see that we break a long and then we break a short, back to back, it doesn't matter what if it's a long first or a short first, but if you have a break back to back, I immediately switch gears and look for longs at lows and shorts at highs. And a way to make sure that you're not just, getting stopped out in the middle of the range is to let it trade first. Let it stop there, look for a swing low to break, and then draw up a setup in that same direction. But in this case, we didn't have a stop, or we didn't stop at the 50%. We broke through the 61.8, and so that's kind of your cue that, okay, I need to stay out of the middle of the range. And that occurred, in the first 20, 25 minutes of the day, where we had the long failure and then the short failure. So pretty early on to get a cue of at least what the first hour or so might bring, and pretty easy to also draw a box around that consolidation and then just kind of have a no trade zone. So a couple important takeaways from today is if you have a range, identify the top and the bottom of that range, stay out of the middle, and be patient and wait for a break above or below that range. Bigger picture wise, if you have a swing trade position on, wait till the close of the day to manage the position. Sure, there's going to be instances where intraday you may have a deeper move, but if you wait till the close, even in in the case of these options, a lot of times um, the volatility has more of an impact on the option price throughout the day sometimes than the actual price of the stock. And so waiting for the close is a good way to get a consistent management of the position. And so if you for all of your swing trade positions, or even if you're going to add to a long-term position, wait until that last hour of the day or the last 30 minutes of the day to make that position, or to add to it, or to close that position, do any kind of trade management. At least that's what I like to do, and it helps really give you a clearer head and frame of mind throughout the day, and you don't feel so uh, pulled in different directions as you're trying to day trade and look at what's going on say the ES, and then you're also trying to manage some hedges, and you're thinking, ooh, the market's down, I want to add some long-term positions. It can quickly become a little bit overwhelming to a lot overwhelming. And then all of a sudden you start making bad decisions, or you make some mistakes, or you miss some intraday trades. So if you just have it, the plan laid out that, okay, in the morning I'm only putting on swing trades. So I'm okay initiating a new swing trade in the morning, and I'm obviously okay, day trading the morning session. But when it comes to managing a swing trade or adding to a long-term position, then I want to do that at the close. So if you have questions, feel free to put them in the chat, the comments below. And if you want to follow along throughout the actual live trading session, you can do that on Tuesdays over at eminimind.com/VIP. So thanks everyone, and have a great rest of your day and a great weekend.